above the line here, the all-time high, if you got a second close above that high, it's very unlikely that the institutions are playing games to lure. For me, mostly right now, it's gold. Bitcoin, I'm actually short right now, in the money a little bit on that. I continue to think it's going to pull back. Eventually, I think Bitcoin is a no-brainer inflation hedge. I just think you have way too much kind of crazy, weak-handed money that's just kind of, they're in it because it's the hot thing. And that always concerns me. So once you see a flush out on Bitcoin, whether it's to 40,000 or to, 20, you then want to start accumulating, because I do think it has longstanding aspects to the inflation trade.
Last time we mentioned 20 as a target for you, where you'd be buying. Would you buy at 40? You just threw out 40, which is twice as high as your last target when we spoke a month ago.
Yeah. So let's go over the Bitcoin chart, because I think this is a really intriguing chart. So number one, I shorted at 66,100. That's the level I am currently short. So I'm in the money, a little less than $6,000 per coin, which is not bad, but obviously I'm looking for more. The reason I shorted it is because there's a technique in the charts that kind of fools the average investor. But if you learn how to read charts, you can kind of see these things ahead of time. So what we saw was Bitcoin rallying up to the 65 former high and closing above. Now, the average investor is going to say, oh, this is a breakout. This is now going to 100,000. And that was the predominant feeling out there on Bitcoin. Like, this is a huge breakout. And then all of a sudden, Bitcoin turned down. And we've seen it trade back to the 60,500 level right here. So what goes on here is that, first of all, you had to remember that there was an ETF launch into that period. So there was so much hype. There's a lot of manipulation in Bitcoin too, where I really truly could watch price action on Bitcoin. And every time it started to dip prior to the ETF launch, it would get bought up. And you might say, well, why? Well, if you think about it, if you're launching a product, you don't want it to collapse just before you launch your product. I mean, that's just not good for marketing. It's not good for how the launch will be remembered in history. So there was a little bit of kind of hype that was driving it up, but also I think a little bit of buyers on the dip by the underlying distributor of the ETF. The other factor here is that when you close above a level, the institutions know the average investor thinks it's a breakout. Oftentimes, without confirmation, it's a technique I use, you'll see the reversal occur, and that's basically what happened. So when I shorted here, I was banking on the fact that this was a game being played by the institutions, and sure enough, it has come in, at least for now. Now, the last thing I'll say is you're absolutely right. So when I was on last time, we hadn't taken out 65,000 as a high. The way I was figuring was, I said 6 months, I thought you would get down to 20,000. I still think you'll go back to 20,000 whenever you get a deleveraging event. But I was basing that 6-month target on the fact that the cycle mirrored past cycles from 2013 and 2017. In those past cycles, we never made a higher high on Bitcoin. So basically, once that happened, I had to go back to the drawing board and say, okay, I still think 20,000 will come, but the time frame now does not match up with previous cycles. And therefore, I have to kind of reevaluate. So I still think it's coming, but I think you might get a pullback to 40 and then a bounce back to 50. And then maybe, I don't know if it's 6 months or a year from now or whenever the next winter occurs, you should go back down and eventually retest 20,000.
So with Bitcoin, with this analysis, we say in the commodity space that the most bullish thing for a commodity is an all-time high, because literally everybody's in the money, so everybody feels good about it. How do you reconcile that with the top we just saw in Bitcoin and then the quick sell-off, how the institutions, you said, played that?
Yeah, I mean, it's such an interesting thing. And I've seen it on stocks so often. I've even seen it in commodities occur. Overall, I think the fact that it made a new high in the longer term is bullish, right? It shows people that more people are getting attracted to the space of Bitcoin. They're getting more, there's more people every day kind of thinking, oh, maybe I should put some of my portfolio in Bitcoin. But the problem is that what I look for, and this is the confirmation signal, which is something I spent years developing, is that I found that when you just have one daily close above a level without a secondary close higher, I would say about 60% of the time, maybe even 70%, there's a reversal that occurs. If you can get a second, so you closed above the line here, the all-time high. If you got a second close above that high, it's very unlikely that the institutions are playing games to lure people in because it costs them too much money to do so. So for me, at least, especially with Bitcoin, but even with other stocks, I need to see that confirming move above a high to really believe it's a breakout. Now, Looking at Bitcoin, we've pulled back. We're still very close to the highs. We could always trade back up. But again, I'd still want to see that confirming move above to believe it has legs in the near term towards 100,000 or greater.
What about the Bloomberg Commodity Index, DJP? What do you see going on here amidst our talk on inflation?
Yeah, let's take a look at that chart here. Looks like a cool chart. That chart is looking amazingly strong. I mean, it's continued. I like this base right here. So you can see here it consolidated. That's beautiful consolidation. It looks like short term it may need to pause here. So one of the things I look for is kind of what's called a measured move. And you could see that the last run up started here and went to this point. So you had, on the chart, it looks like about a $3, about a $4 move to the upside. And then it went consolidating and it kind of digested that move. And then if you look here from the breakout point, it's another $4 move to the upside. So what we call in the technical world is a measured move where it's matching a previous surge to the upside. So while the chart is beautiful, I would let it digest again, maybe pull back a little bit and then look to get in. But overall, it's been a great, beautiful chart. There's nothing, if you've been in this for the last year or two, you have done very, very well.
What about the major indices, the NASDAQ, S&P? I think we talked about a stair-step rollover top last time. Share with us your current expectation.
Yeah. So right now, here's the NASDAQ 100. This channel continues to be just an absolute beauty. If I zoom out, you can see how long these parallel lines have been in play in the market. I honestly thought the last time I was on, we were just starting to roll over. I thought this would be a bigger rollover than it's turned out to be. I think the NASDAQ may be down 7 or 8% at the lows, which isn't a bad pullback, but I didn't honestly see new all-time highs coming. I said, all right, they'll bounce the market off the low end of this trend line, but you probably won't make new all-time highs. Obviously, I was wrong in that aspect as we've made new all-time highs. I'm looking at the market. I still see craziness in here that needs to be flushed out. There must be, the Fed is still supplying a lot of liquidity, which makes me concerned because at some point they're going to pull back. Maybe on Wednesday, the Fed will start announcing when they're going to start tapering. I'm curious to see how the market reacts. But overall, I'm buying. There's certain areas I'm buying in the stock market, like China stocks, which are doing really, really well today. I bought those on Friday again. And then I'm also looking to short the indices here. I just can't. There's too many negative signals, whether it's people taking crazy risks, like with Tesla being up again and again and again, or other things out there that make me concerned about being too long with the exposure to the overall stock market.
And you mentioned Alibaba last time you were on. Was that one of your best trades in the last 30 days?
Yeah, that was an amazing bounce. Absolutely. When I was on, it was trading right around these lows, and it got a bounce from basically $140 back to $180. Now it's pulled back a little bit. I haven't re-entered this one. I have re-entered Baidu, which I re-entered on Friday. That's getting a good bounce. I love that retrace there. And then I picked up some other ones like Diddy, which is that car ride hailing one as well. So there's some that I've kind of inched back in, but please understand it's a very small percentage of the overall portfolio, as the Chinese stocks definitely come with a lot of risks of regulation. So, I think at these levels, when I compare US stocks to China stocks, the valuations are so attractive, even with the regulatory concerns, that I have to have some exposure there. But overall, you just want to be very careful.